Test, test. I think I'm on. So, how's everybody doing? Halfway through the week. Well, at this point, more than half. 2 days to go. 1 day, 1.5 day to go for some of you. 1 day. So, good evening, good morning, good afternoon, wherever you are around the globe. Glad you got some time to join us tonight. I'm doing okay. I'm doing okay because I already have holiday break in mind and in vision. The light at the end of the tunnel is getting brighter for that break. So, pretty good stuff. Oh, I get the good evening. Everybody else gets the love. Hmm. All right, all right. So we're making some good progress with quick fire trades. I see some good growth, and that's really encouraging to see. I see some Charlie Delta trades. And we'll talk a little bit about both tonight, not much. So tonight, we have a group that is going to be over 5,000 before the end of this month. Uh, a month or so back, we kind of set 5,000 as a goal for end of year. And so we're going to make it about a month early, probably, if not sometime next week. And, we don't want things to get out of control. And we're working on the admin side to beef up the admin work. We've been a little slack the last couple of weeks, so bear with us. We're admins in a couple of groups, not just this one. So we're working on that, and in order to really provide benefit for you guys in community, and what that means is so you can post a trade and have other traders comment on your post and help you, as well as our admins and moderators. And so you could do the same for others. As you gain your skills, you give back a little by commenting and critiquing and helping other traders move forward when they have questions or they need help. But only if you have the answers, right? You don't want to guess. You don't want to mislead through guessing because of your ego, etc. So, we will be 10,000 strong in short order. And in order to make any kind of commitment to be able to help traders when a group gets that big, we do need help on the admin moderator side. I put out a request and I got several people that responded. Thank you. and I'll be getting back in touch with you about that as time moves on here. We've got our existing admins, which are kind of going through a little training and a little updating. And then the last piece of that puzzle is guidelines and posting requirements. So we have to get a little bit more detailed. Many of you are already including some information, but we have to have it in a little better format, in a consistent format. So right before the session started, I did post posting guidelines or posting requirements. Don't go looking for them because I'm going to bring them up here in about 2 seconds and we're going to review them. I did make a little bit of a snarky comment there because I know, see, we use these kinds of guidelines in other groups that I have very effectively. And it does take a few days to get used to them, and then once you get used to them, you'll see the power and the benefit they bring. So it will discourage some traders. But again, if small things are going to scare away big dreams, so be it. That's not going to happen, though. The only people that are going to get scared away are going to be the people who have small dreams, or people that believe they're going to come with the snap of a finger instead of putting in some work. So don't be discouraged, be encouraged, because things like posting requirements allow the admins and moderators to do their job in a faster way, more efficient way, and a more accurate way. It also allows for some pretty handy dandy searching. So here we go. We'll go through quick fire first, and then we will come back to Charlie Delta. We're already on, Ashes. So what we have here is, and I can't use my magic tool on this because the way Adobe Viewer works, it won't let me draw on the screen, which is kind of silly, but it's a conflict of some sort. So we have a header that goes at the top of your Facebook post, and it's going to look like this. And what that is pretty simple. It's your initials. It's the total number of trades you've posted in this group of any type. So you're going to have to go back to your journals and notes to figure that out for those that have already posted in the group. Which form of quickfire are you trading? The basic, which means you're going for 10 pips and you're out. The 15%, so it would be QF 15% up here instead of QF basic. QF Hall, if you're going to use the Hall for the exit. QF Median, if you're going to use the Scan CD fork to create a pitchfork and you're going to ride that 80% odds from the swing low or swing high to the median. QF Fibo, you're going to use the Scans printed CD Fibo targets, target TP1, TP2, TP3. Or it's a quickfire harmonic wave convergence trade for those that have harmonic wave convergence. So pretty easy so far. Initials, number of trades you've made in the group, quickfire, which model of quickfire you're trading, and then how many trades for that quickfire model you have posted. So a little journal keeping required. Which currency pair, which broker, what type of pattern, what time frame, and the date the pattern scan was painted. Now, nothing hard there. It's just keeping it in sequence. So once you print this out, you'll be good to go. Any questions on the header information required in the post? Check, check. No, total all trades. Good question, but just total all trades. All right, now the backside of that, or the rest of the post. So, as it says here, what to add after the header line of the post. So, what I would do is I would get a text file, open Notepad or whatever, open a text file and write all these down exactly as you see them here. And then every time you go to post a trade, I would just paste that in the entry and then you just fill out the information. Yeah, it was fun while it lasted, huh? And in fact, I can blow this up just a tad, make it a little more clear on your screen. Can't measure my lag today. So we have entry time, your green line price. If a shark pattern, use the second green line for the green line price. Your entry price, your entry type. Remember, in quick fire training, there are three types of entry: the 15-minute live candle, the 15-minute engulfing candle, and the 5-minute close candle. So which entry type did you make for this trade? Your stop loss, yours, not the scans. What is the length of the CD leg? Was your green line hit? Yes or no? Most of you are already doing this. Green line hit, Bollinger hit, RSI, divergence. If it's yes or no, specify which you used. We should see it on the chart. Your exit price. So if you're legging down, include exit price 1, exit price 2, etc. So you just add those. Exit price 1, exit price 2, exit price last, for how many ever legs you have. Pips you gain. This is trading station. And then if legging down, the pips for each leg. Leg 1, 5 pips. Leg 2, 15 pips. Leg 3, 12 pips. Whether it was demo or live. And then any other comments you have. What else you might have seen in the setup. Questions you have down here that you can ask of the admins or moderators. So that's the textual information. Again, most of you are putting there there is a method to upload written material onto a Facebook group. Is it possible we can have this already uploaded in the iMarkets Live Scans, Forks, and Fibos group? There's a post made about 10 minutes before this session started. The PDF document is there for you to download. So yes. It's already there. But no need to go and write it, seek it now. Just copy this information down once and then post it, use it as a notepad, and you'll never miss anything. Let's look at the rest. Your actual chart. Let's talk about your chart. So, TradingView especially, use your camera icon. Most of you are doing this. If you're going to screen shoot anything or submit a screenshot in the pictures, don't crop out the time, don't crop out the prices. On your quick fire trades, you have a lot of detail in there on pretty tight. If you have a big scan, there's going to be a lot of detail in a very tight space. Chart stop loss, entry line, your stop loss, 10 pip line, 15% line, Bollinger bands, etc. So zoom in. If you are using the 5-minute close candle, for entry, then include a copy of that as well. You know, what's the nice thing about TradingView is it's a link, it's a link. Submit, if you're going to submit multiple charts, submit them both in the main body of the post. Do not submit a second link in a comment field, because then we can only comment and it looks like it might be to the second picture because we have no place to comment on the first picture. So include both links in the body. It's going to pick the first one to make a picture of, but the second one will be there at least. If you're using TradingView charts, you must have a correct version of the scan copied to the appropriate time frame. Your green entry lines must be drawn at the correct price points. And the scan's printed stop loss as a red line labeled scan stop. So we can see not only where your stop loss is, but where the scan stop is. Your ESL will be much tighter than the scan stop. So you're going to draw that as a solid red line. If you're trading the basic version where you're going for 10 pips, you want to have your 10 pip line there in yellow. No matter what you're trading, we want to see the 15% Fibo line. That's a training tool for you to remind you how consistent this thing's going to be. So it needs to be on the chart so we don't have to try and guess. Your entry will be a thin green arrow pointing to the price point in the candle. Don't use a big fat arrow. Use one that's precise. And if it's a 5 pip candle, show us where in that candle you got in on with the green arrow. Now, something we've done very successfully in my other groups, a solid white thin vertical line top to bottom of the price field, one candle to the left of your entry. That's so we don't obscure any wicks in your candle. So the white line on a chart will always mean one candle to the left, unless that one candle to the left has a Mongo wick on it. Then you're going to put that white vertical line 2 candles over and put a -2 on it, so we actually know the entry is 2 candles to the right. This is a tremendous help when looking at charts. Your exit should be a thin red arrow pointing to the price point in the candle you exit. If you're legging down, then an arrow at each leg exit with LD1, LD2, LD3, etc. If using the web scanner, use a thin black line instead. If you're on TradingView, you need a black background. Now, if you're on MT4, well, you're a lost cause. So, there you have it. It's pretty simple, really. It looks kind of overwhelming. Right, well, the problem with white is things like yellow and light blue and things like that don't show up. The other thing is if you spend a lot of time on charts trading, you'll find out almost all traders prefer the dark backgrounds because it's easier on the eyes when you spend a lot of time on the charts. If you ever go into a programming shop, it'll always, there are no lights on in the room and the charts are all, their screens are all black. Everything they work with is black. It's to make it easier on your eyes. You get eyesore really fast. Well, ease into it, no rush. I'm not going to make it a requirement. I'm just saying why a lot of people prefer the black. If you feel you trade better with a white background, go for it. But just accommodate everything and make sure the lines that are supposed to be yellow can be seen. They show up nicely on a black background, that's all. All right, so any questions on the quickfire portion of the guidelines? It's pretty simple. Like I said, you could print it out and you can make a notepad and just put this header line in there and make sure you got all this stuff. But on the back side, copy the header, all these variables or all these fields that need information, just go ahead and fill them out in a notepad, and that way you can cut and paste it, and it's so simple then because you have a guide. It's like a template right in your Facebook post. Well, here's the thing. See, we can keep it all sloppy and random, and then you're going to have less and less interest from the admins because it's too much of a strain on the admins. You might not see it that way because you principally look at your charts and sometimes a few others, maybe when you're on the charts. But if you start looking at 25 and 50 and 100 charts a day, it gets very hard because it's very frustrating. And there's nothing like wanting to help but it taking 3 times longer. So the reason we have this is because it's successful in other groups that we have. So it's like kind of silly to not bring it to this group as well. It's community, and the community grows, and so you need a standardization. We don't need everybody having their own little way of posting and then trying to transfer and remember who did what and who does what and how they do it. And so this is kind of like a posting translator, if you will. And so as we grow, we want to give the same experience to everybody. We want to be able to scale the growth, and this is one way we can help accommodate that. All right, so I don't see any questions on Quickfire. Let's jump to pitchforks. And this would include standalone Andrews pitchforks as well as Charlie Delta. It's not going to be a whole lot different other than here where it comes to what it is you're trading. So again, your initials, the number of trades you made in the group, and then here, what kind of pitchfork is this? So some initials to make it easier. CDX is going to be a traditional Charlie Delta fork. Pretty self-explanatory. CDBF, a best fit as it gave better touches than the traditional. XABF, that's a traditional XA fork where we have no place to stick the median. XAT, this is an XA fork where you found a good swing low or swing high previous to it, and it created the median touch, and it makes it a traditional fork. Then you have SO. That's for scan other. So maybe it's a XC. Maybe it's a, some other combination. It's using components of the scan, but it's not the true Charlie Delta X-ray alpha. Maybe it's an XC. So scan other, so it's a fork still based on the scan, but not using the above combinations. See, the reason we want to do this is so then we don't go in there and see you go X to C, and we go, oh, well, you're supposed to go CD, thinking you're just a little off, when you knew what you were trying to do. So if we know what you're trying to do to begin with, it makes it easier for us, oh, okay, I gotcha. Versus writing some comments and you comment, well, that's what I meant to do, and then we have to see our notification of that, and we go back to, oh, okay. It's crazy. You have to understand, every time you guys post, we get a notification. Every time somebody comments on somebody's post, we get a notification. You know the deal. So, yeah, the Wild West is gone. It does help your RAS. Good comment, Theo. So where do we live? BS is my favorite. That's a BS pitchfork. So BS is a pitchfork which drawn before the scan painted. Now you don't have to draw it before the scan painted, but the pitchfork was there before the scan was painted. So you drew it as if you were drawing it before the scan got there. I hope you understand what I'm saying there. So it's not using the components of the scan, but it might be touching some of the pieces of the scan. And it was meant to be looked at. You intentionally drew it before the scan on the chart. So maybe the scan was already painted, but you drew the fork in front of it. Let me put it that way. Then there's an AT. So we're away from Charlie Delta. We're away from scans. This is just what we used to do, 5, 6 weeks ago. These are just standard Andrews traditional forks or a best fit pitchfork, not associated with any harmonic scan. So pretty simple for the nicknames, the abbreviations, whatever we want to call these, to fill in here. Everything else the same. How many of these trades? So how many Charlie Deltas with an X have I traded? And that number will change depending on which one's here. But we want to see your degree of expertise based on the number of times you've traded it. Again, we're looking at hundreds and hundreds over the week of trades, and it's hard to keep track of where each person is. But if I see somebody post something like CDX 57 and they still don't know to put the median to the X, something's not right. You see what I'm saying? That's my specialty, trading BS forks. I like that. Oh, David, this is your first time in this session. All right, so hang around. I'll put up a slide at the end. This is for posting trades in our group. We'll circle back. Theo, I don't know if Zoe's here tonight. Today's Wednesday. Tim's probably at church still. Yeah, we'll come back in a few minutes, David. So that's it for that. Everything else stays the same. The euro, the pair, the broker source. If it's not if it's a fork like an AT or a BF, all you do is say NS. There was no scan involved. So instead of a pattern, it's just NS. Still Trader's Way, but NS. Time period date. So very few things change in the header. We go from which form of quickfire to which form of pitchfork. Everything else is the same. And you can accommodate both standard forks and Charlie Delta forks this way. All right, for you guys brand new, it's okay, Tim, I gotcha. For you guys coming in late, Tim, can you post the URL or give them the Facebook group so the first timers in here can at least check that out? Tim's gonna post the name of the group, and you guys go and join that group. It's a public group. It is my technical group for scans, forks, and Fibos, which is a pretty comprehensive thing. We cover harmonic scans, we cover pitchforks, and we cover advanced Fibonacci. We haven't got there yet, but we'll get there. We're cleaning things up, so here in the not too long, a first timer will come in here. We'll give them one link, and they'll be ready to roll. It'll be a first timer to the group page, download or PDF file at the group. They'll download it. Welcome first timers, and they'll be on the run. They'll be able to get going. So we're all about making everything more efficient. So let's look at the underside of the header in your Facebook post for pitchforks and Charlie Deltas. Now, one thing I'll want to say here is that Charlie Deltas, a lot of them will be entered after your during or after your quickfire trade. So we still, if you're entering a quick fire trade and transitioning it to a Charlie Delta fork, we still want to have all the baseline quick fire information. Okay, so if there was a green line entry, that'll help us understand, right? So everything the same, green line price if there was, your entry price, your entry type, again if it was a quick fire trade, your stop loss, here's not the scan's length, all the other stuff that was there before for quickfire still holds. If you have a template and you just cut and paste this from your notepad, if this wasn't a quickfire entry, it's pretty simple. Green line hit, NA. Bollinger Band hit, NA. RSI over 70, NA. Divergence, NA. Whatever. So it's cool to paste it and then respond to each one. Money management. This is pretty easy. How did you manage this pitchfork trade? And we'll talk about defaults. I'm going to talk about that a little tonight. Exit price, same deal. If you're legging down, exit price 1, exit price 2, net pips, demo trade, comments, questions. Nothing's different. Let's look at a few things down here. One thing that we haven't done that we should do, same thing here, if you have a super long fork, I'm going to want you to submit 2 trades. One showing the entirety of the fork, including where the median was taken to. If it's a traditional, if it's a best fit, we still want to see where the median is because we might see something there you don't see. If you're going to zoom in, or you do this on a lower time frame, such as you have a 15-minute fork, but you're going to put it on a 1-minute chart for entry, we want to see the 1-minute chart. So include 2 links. Pretty simple. If there's a trading view, if you're using a scan, you need to have the scan no differently. Green line no differently. Scan stop loss no differently. All charts must have. Check this out. This is key because everybody always asks questions about this. We're going to put a medium thick vertical dotted red line through the entire fork, I mean up and down inside the fork at the time you drew the fork. See, that'll tell us if you have a fork that's 10 days old, we'll at least knew when you drew it and started applying that fork. And it'll help you and other traders that look at this. Yes, legging down is just a way of saying you're incrementally decreasing the amount of lots in the trade. You're closing lots as you move forward. So that's going to be very, very powerful. Your MSL, dotted line, ESL, solid red line. Again, even on a Charlie Delta, if it's a Charlie Delta, the 15% line. Everything else remains the same. Nothing, nothing different. So it's pretty simple to transition right from a Charlie Delta into a pitchfork. If if a scan's not involved, there's just no need to enter any of the information about the scan. We'll see what's going on. If it's a Charlie Delta, did you use any of this criteria to enter the trade, or what'd you do? So pretty simple for forks once you understand the quickfire entries and postings, then the forks become easy too. So all the admins have been tagged on the post entry that has the file upload for this PDF file that I did about 15 minutes before this session started. So the admins will know to download that file. And what we're going to do is, if we see that you have a trade posted that doesn't comply with these requirements, the admins will tag you in a comment. They'll put your name as a tag, and they'll try and tell you what's wrong. Please review this post for, and then since you're tagged to it, you need to try and get to that ASAP. We don't want to get to the point of being like some super police state where we're deleting forks and quick fire trades because they're not in compliance with the posting requirements. But if somebody continuously disregards the posting requirements, that's what we'll do. We're not going to have any easy fixes in here. You're not going to put the admins and moderators through extra work just for you because you didn't want to do the work. That's not fair to everybody else that's doing the work and making proper posts. So we understand mistakes. I mean, hell, I made 20 mistakes just making this document. So everybody makes mistakes, and oversights for something like this, especially your first half dozen times, it's going to happen. Just edit it, fix it, and we'll be on our way. But if somebody is continuously abusing the posting requirements, we'll just stop them from posting. They'll get the message really fast. Every time they make a post, it'll be deleted. We'll tell them why. They'll turn around. They'll start making it right. So just don't be that guy or gal. All right. Any questions in general about quickfire posting guidelines or the Charlie Delta pitchfork posting guidelines? All right. So they're posted. If you're going to post trades, try and make your next few trades. Don't go too many trades without following these guidelines. Technically, if you're here and you see this or you saw the post, you should start right away. Print it out, make your notepad templates, and you'll be on your way. It will take a little longer on your first few trades. Once you get into the swing of it, it's not going to take much longer than what most of you are already doing. It's getting the lines right. That's where you'll be asked to stay in compliance. Well, I'm still up for the 2 seats on any Caribbean cruise. That'll get you pretty far in here. All right. So, yeah, I saw that question. I'm sorry I didn't circle back, Brina. Now, Brina's the name of your dog, right? Because I think I made that mistake before. So, the answer to that is no. I don't have a good template for a trading journal. I've tried to create trading journals before for traders, and the problem is there's kind of too much information. With Quickfire, it might be possible. Um, but here's what I would say to you. Unless Mark Zuckerberg closes Facebook, what most of my traders do is use Facebook as their journal. And since it's searchable, you can follow your trades. Because you can go in there and search on SG001 and see your very first trade. You can search on SG002. You can search SG-BAT and get this trade. You'll get all the bats. And should see them 1, 2, 3, 4, 5, 6, 7. Or you can do it in reverse, most recent and see it in reverse order. And so this, for many of my traders in the groups where we do this, the Facebook post, and this is why we do it, so it's searchable. So all the valuable information is here that you need to keep track of. And so, when did you enter? What price did it make? Blah, blah, blah. It's all right here. And so unless Mark Zuckerberg closes Facebook, this will stay here as long as they allow groups to be around. There's comments and questions. So the comment field, that might even be a comment field for you. You could say something like, note to self, blah, 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 blah. Yeah, so Theo there, NCFX, is one of the admins, and he recognizes we do this in some other groups, and it's just so much easier to manage for both you personally and for the admins. And trust me, we'll be able to pull some data out of this that we'll share with the group. Generic data, not individual data. We could come up with what is our average pip gain on a buy on a deep crab at 15%. So we'll be able to make some of our own statistics out of this by there being standards, which can then help you in your future trading. Okay. So let's go here. Go back here. Put this up top. Now I can do this. Maybe not. Yes. All right. So I want to talk about a couple things here tonight. And I'm not, listen to this, I'm not trying to deter you from what you're doing. But I just want to review some math. Some of you are forgetting this. You gotta get the end result first. Why am I struggling? Okay. So we have a fork, and we feel comfortable the D has set. How are we comfortable the D is set? Well, one, we might have quickfire qualified it. It's quickfire qualled. Trying to write with that mouse. Two, maybe we didn't quickfire qualify it, but it's on its way down. So if the entry line was there, and now price is on its way down, we could assume the D is okay. Now, what I'm talking about here is Charlie Delta fork. So we've left quickfire for a second. I want to talk about Charlie Delta. So we can draw our Charlie Delta fork. And I drew it so it's pointing down, so even in my diagram I got it somewhat right. So we have a Charlie Delta fork and it's pointing down. Remember now that we have two numbers working in our favor. The first one, the quick fire trade, 89.33% of the time, based on multiple 100,000 studies by Scott Carney and FX Groundworks, these guys that specialize in harmonic scans. This isn't a Steve Greger number. 89.33, well actually that is a Steve Greger number averaging their studies. 89.33% of the time, this is going to come down to 15%. At least. That's the minimum. 89.33% of the time. So we talked about this. What does that mean if this CD leg is 100 pips? What's going to happen 9 out of 10 times? Well, IML is not using it as a, they're not using this, win or lose is not, rewind all that. The scan is something that happens on the chart. The scan's success is how far price moves, which can be traded to your advantage or ignored and traded to your disadvantage. So it's how you apply your trading to the scan that's going to manufacture the pips or prevent the losses. So if I have a 100 pip scan, we should be able to catch 15 pips. So let me tell you the kinds of things we shouldn't be doing. I just want to maintain continuity and no conflict in your trading. This is why we want to swing that Fibo and get our 15% line on the chart, whatever it is. So that would be 25, that would be 12, that would be 25, and half that would be 15, 12, somewhere in there. So somewhere about here, we got our 15% line. I want to blow that circle up or blow that area up. So I'm going to take this little area here and blow it up and bring it down to the bottom right hand corner of your page. So we have a red fork corner. We have what should be on our charts a 15% line. We may have, if we're just getting started, it's okay. Creep, crawl, walk, run. We may have a 10 pip line. So price starts to leave this, and we get down to about 8 pips. And what I've seen several times now is somebody says, well, I locked in my 5. So they advance their stop loss either trading station or manually, depending on what they have the ability to do, depending on workstation or broker. And you want to think about that. So what they're saying is, what are the odds of this trade going back through, taking them out so they get to keep their 5 pips, and continuing onward, breaching the fork, making it a failed fork? What are the odds of that? Let's see where you got how much you guys have remembered. Hey Alex, we'll get back to you in a minute. Yeah, it's 10 to 11%, right? It's the, whatever that is. 10.73. 1 out of 10 is good enough. So they're worried about locking in 5 pips. That's going to happen 1 in 10 times. Now remember, guys, just like flipping a coin, when I say 1 in 10, I'd probably be much more accurate to say 10 in 100. It's the same in terms of statistics, but don't let this filter your head, because we know flipping a coin is 50-50, but not necessarily in 10. I might have 3 heads in a row. I might have 7 heads in a row. But by the time I flip 500, by the time I flip 1,000, by the time I flip 250, it's going to be real close to 50-50. So don't let this, oh, I've taken 2 trades and they both stopped out. So all of a sudden you're going to be smarter than Scott Carney. You know the percentage is better than Scott Carney. You know the percentage is better than some real expert scan traders who did a test on 100,000 patterns. Man, you've got a big fat ego if that's the case. So in this example, this locking in 5 is silly because I'm doing it for 1 in 10 trades. Which means if I do this 10 times in a row, if price came down past my 5 pip line and went back, if I did this 10 times in a row, I'm making 50 pips. But let's even use just the 10 pip line. If it's going to get to the 15% line 90% of the time, doesn't it have to get 10 automatically? Doesn't the 10 hold the same statistic? As long as the 10 pip line is on this side of the 15, if it's going to get to the 15, it's got to go through the 10. So his famous or her famous locking in 5 yields 50 pips if 10 times in a row it went against them, but it doesn't. It only goes against them 1. But they're doing that on every trade. So what's going to happen on the other 9 where it may come back and go through them and literally stop them out? The other 9 times, the one time it did it for them, the other 9 times it's going to go through their stop. It has the potential to. It might just continue onward. But it's going to go through their stop and then come down and hit the median, which means it goes through, hit the 15% line, which means 9 times out of 10, they should get 10 pips. So if they get 10 pips 9 times out of 10, and the one they don't, and they're using a big 10 pip stop on this, what that means is 9 times 10 equals 90. 1 times the minus 10 equals minus 10. So in 10 trades, they make 80 pips. But they're so bent on locking in 5 that it makes them 50 pips. So this is where emotion is overruling the logic. This is where somebody's not paying attention to what I'm saying here. This is where somebody maybe is paying attention to what I'm saying here but not writing it down in their notes. This is where somebody might be paying attention, writing it down in their notes, but isn't reviewing their notes. So it sinks in their big, thick skulls that there's a statistic here. There's very few places where we have such solid statistics. Very few. At this level. 90%, my Lord. And so what happens is the emotion kicks in. They get 5 pips and they're like, oh, wow. Now, I mentioned this the other day, I don't know which group. It's okay to end up with 5 pips in a trade. I showed you in an income calculator, somebody's asking for a link to it. I show you an income calculator where 5 pips a day for 23 days a month for 24 months with a $5,000 balance yields $1.43 million in less than 2 years. 5 pips. But that doesn't mean we should go and target 5 pips. It means if we do something and we end up with 5 pips, well, that's okay. If we follow the system to the T and for whatever reason we end up getting 5 pips out of the trade, that's okay. Remember, that's also 5 pips as an average each day. What if I don't trade tomorrow? Well, I don't want to target today for 5 pips. That's stupid. It means tomorrow comes, now I'm behind the 8 ball. So if I have a trade that's going to go 10 pips 90% of the time, that's what I'm going for. So I make my 10 pips today. I don't trade tomorrow. Guess what? I've averaged 5 pips a day. Don't set out to target 5 pips a day. It's not how you trade. You do your best. If you get 5 pips in the trade, know that that's all you have to do every day to have 1.43 million in 24 months. So this stuff, see, when you lock in something short of a known goal, that's all emotion. That's emotion taking over. And emotion is a really bad beast. You know, I've said it before, ego and emotion are the two worst trading partners you can have. You have a puppy, you know, and he goes and poops in the corner. You need to train him out of that really fast. Because every time he goes there and does it, it increases the odds he's going to go back there again. And emotion is the same way. It's pooping in your corner, my friends. Because every time you cave into emotion, the next time emotion is even a stronger beast to deal with. I hope you understand that. So when you start caving in, well, I'm going to lock in 5 pips because that's out of fear. You don't want to lose those 5 pips. In a random trade where you don't know where it's going and you're up 10, 15 pips, that's a smart thing to do if you don't know so much about trading. As a new trader, that's a good thing to do. Get some pips going, build your confidence. You'll see that you can win at trading. That's okay to do in a random blind situation. A Charlie Delta pitchfork, where you automatically have a traditional pitchfork drawn for you, you just have to put the lines on the chart, and the creator of that pitchfork, through thousands and thousands and thousands of trades, says, guess what? I've determined there's over 80% chance you're going to get to the median. So now all I have to do is size up the median, so I know how far my median is. In our case of the scan, we know we're going to get 15% 90% of the time. So pitchfork or no pitchfork, on your scan, locking in 5 pips, locking in 7 pips is not what you want to do. Because you're only doing that for the one time in 10. What about the other 9? You may deny yourself 30, 40 pips. Easy. Because emotion is kicking in, and the fear of losing having the erosion take place. So if you understand this, you're going to quickly get past that 10 pip line in your trading. You're going to do quick fire basic, a handful of times, start making 10 pips. I want you to go creep, crawl, walk, run. That's my philosophy. So I want you to do quick fire basic until you have 4, 5, 10 trades that all go 10 pips. You got in, you got out. Or if they don't all go, what you see is it's only a few that don't. And you need to trade this until you get the percentages. So if you take 3 quick fire basic trades and they all stop you out, you need to take a bunch of trades so you see the 90%. You need to see the 10 to 1 pan out. Just like if you flip heads 3 times in a row, you don't want to stop flipping the coin. You want to keep flipping to ensure the heads. Don't worry about losing more. The odds are very statistically in your favor and against you losing more consecutively. So start winning. Start that KSP. KSP. Your knowledge of system performance. You want to get a feel for that knowledge of system performance, because when you have that knowledge of system performance, because you've traded it and traded and traded it, when you do get a loss, it's just no big deal. On to the next trade. It's not like your entire kingdom just fell down because you had a loss. Until you have KSP, you're not going to have that ability. You've heard me say it before. Some people didn't understand what I meant. They thought I was just some big arrogant slob when I said the only trades I take are the ones I win. That's KSP. I've already deselected the ones that have a decent amount of losing percentage attached to it. Why? Why spend my time there? Not only is it time, not only is it financially not good, the bigger part is it's mentally and emotionally not good. I want to keep my worthiness level high. I want to keep my confidence level high. I do that by doing things that have high percentages, and then do that in volumes so I actually get to witness it. So get those 10 pip trades. And what you'll notice as you get those 10 pip trades, because remember, you're not trading George Soros's money right now. Get your 10 pips, lock it in, and then what? If it goes past 10, 11, 12, 13, starts pulling back, now you can exit at 10. If you want to get 10 pips and you have a fast moving candle and it goes 17 pips and then it starts pulling back, don't wait for it to pull back all the way to your 10. If you're going for 10 and you got 17, as it starts pulling back, 16, 15, 14, exit there. So you were going for 10, but you got 14. That's how you trade. Don't exit because your candle hits the 10 pip line. You need to go past it and have some pullback. Once you start doing that, you're going to see the vast majority of the time, it goes all the way out 15%. That's why you want to draw your 15% line. I have traders say, Steve, I'm not trading 15% now. I'm just drawing 10, so I don't need to draw the 15% line on my chart. Oh my gosh, yes, I've only taught over 10,000 traders over 14 years. I'm going to ask you to do stuff that's stupid and wasteful of your time. That's not ego. I'm just speaking factual experience. The reason I want you to draw that 15% line on the chart as you're going for 10 pips is so you can see the majority of the time it goes right past your 10 pip line and goes all the way to 15 as long as your fork is big enough. You will see it for yourself. You will see the 89.33% materialize in front of your eyes while you're collecting 10 pips in a trade. And then you know at some point, once you've got your KSP for getting 10 pips, you'll know, and you can now stretch it out to 15%. There's no need to move a stop loss in this. You moving your stop loss, see, that sounds counterproductive. That seems counterintuitive. Well, that's not what everybody else says. Everybody else says when I get to 10 pips, I should at least lock in break even. I should at least lock in 2 or 3 pips. That's because they're trading blind. They're not trading in something that has statistics to it. In that case, they're correct. Here, they're wrong. This is the one case you don't want to move your stop loss. You have a stop loss in your trading station, guys, but you're not advancing it as you move into profit. Now, here's where we have this absolute unique marriage between the scan and Charlie Delta. Because the same thing applies, the same mentality. It's just we have a little bit less percentage. But the numbers work out. Let me leave the drawing as I have it. Any questions on this? Why you don't want to lock in 5 pips? Why you don't want to advance your stop loss? All right, so let me continue here, and I want to transition to something else that's kind of fun. Hard for me to draw a fork going down because I always draw everything going up. All right, so let's look at this. So I've given you numbers before, but I have to admit something. I lied to you. Well, I'll answer that in a few minutes. It's not that it's not worth trading. I mean, as you're growing, it's always worth getting experience. It's just at least understand what you're dealing with. See, the point of the 15% line is this. If you're going for 10 pips and you have smaller scans, your percentages are not going to be 89.33. The reason being, let's look at that same fork that we just had where the scan ended there. If I'm not paying attention to this, all I'm doing is drawing a 10 pip line. I'm not going to win 89.33% of the time. Why is that? If this leg is shorter, then somebody was just doing the calculations, whatever, 75 pips. 75 pip scan gives you a what? 11.25, 15% line. So what if it's a 50 pip scan? What's that, 7.5 pips, something like that? So what's going to happen is your 15% line is going to be in front of your 10 pip line, which means the scan can satisfy and be successful coming down to the 15% line and leaving. It achieved the 15%. It is part of the 89.33, but from a trading perspective, you lose out. You were taught not to move your stop loss. You were waiting for it to come to 10. It never could get to 10. This is why I want you drawing the red line on the chart. If you draw the red line on the chart as a Fibo, you don't actually have to come in here and measure this. You can see where the red line is in perspective to your 10 pip line. If it's shorter of it, then you don't want to go for 10 pips. In doing so, you're going to increase the number of losses. If it's behind it, then as you get 10 pips successfully, now you want to start stretching that out and get to the 15% line. Because there's more pips. It has to go through your 10 pip line to get there. So the 89% will still hold. It's when the 10 pip line is short, or when the 15% line is short of your 10 pip line, then you're not guaranteed of getting there. No, that's what no. What I said is draw your 15% line and just it depends on where it is. Or, as somebody just suggested, don't trade anything less than 75 pips. But then you have to come in and measure, and now you might turn down a trade. There's nothing wrong with, at a beginner in a demo account getting 7.5 pips. That's not what you want to do ideally once you go live, but to build up your KSP so you see what happens. Your first trade should be to get 10 and get out. All I'm saying is if your scans are too small, you don't have a shot at the 10 pips. As I said in the quickfire trading, the reason 10 pip goal works blindly most of the time is most of the time the scans are of a decent size. But you get a bunch of scans that are smaller, the numbers are going to get skewed very fast. and there's a magic range. So just draw your 15% line. All right, let's move to the forks. So we left Charlie Delta, and now we're talking about this fork. Excuse my bad drawing there of the scan where the B doesn't really make sense there, but you know what I'm trying to draw there. I want to put your focus on, again, this top part. I started drawing this by saying I lied to you. Well, can't win for losing sometimes. Whatever. So if we do our Charlie Delta on our scan, now I know what I was trying to do. Bear with me. Alright, so I'm not the best pattern drawer. I'm trying to make a point to show how I lied to you. I struggle. Whatever. Terrible pattern. But I'm trying to prove something here. Alright. So, there we go. Yeah, I know. Andrew says, from this swing high, on our traditional fork here, I have an 80% chance of getting to the median. And what that means is 20% of the time I don't. Now, in my rough examples to you, I've said, well, if this was a 60 pip fork, the median's 30 pips away at a minimum. We've also said oh, I know why I'm struggling with this, because it's the buy, it's not the sell. That's why I'm struggling. Duh. Nothing changes with the percentages. Nothing's going to change. It's just our entries down here. Right? Yeah, the crooked bow tie pattern. Sometimes those patterns do come in kind of weird. So Andrew says we have an 80% chance of getting to the median. And of course, the longer that stretches itself out, the more pips I make. 30 would be if it went backwards and got here. Even if this candle here goes straight up, I'm going to probably make 32 pips. But if it takes this good old time and meandering, get up here, maybe gets up here, I'm making 40 pips. Because here was the 30. So the 80% changes based on when it gets here. The math of it, what I'm going to gain, changes based on how long it takes to get there. The failures are all about price not reaching the median. That's pretty easy to understand. But now we introduce the difference between what is happening with a pattern, what is happening on the chart visibly, and even statistically per Andrews, and then how you trade it. So watch this. I said you're going to win 80% of the time per Andrews, and lose 20% of the time. What I did when I was doing that to get the teaching in quick was I combined what's on the chart in terms of the visual picture and its success rate with one criteria, getting to that median line. And I merged that with trading to give you incentive, to give you, wow, 80% odds. And I did simple math. If there are 10 trades and we're going to get to the median 80% of the time and the median is 30 pips away, some of you are going to remember this math. It's 240 pips. The 2 times we lose with a 10 pip stop loss is minus 20. And so we got 220 pips, which is a 44% ROI, which isn't too bad on 10 trades that with the 60 pip fork. We just said we want it bigger, but I'm just showing you where that could go. So everybody understands the math here, right? But that's because I combine things. What are you talking about, Steve? Okay, good question. What if price, I'm going to give you 3 scenarios. 1, price leaves and gets up to the median. 2, as soon as you enter the trade, price reverses on you. 3, let's make this a, there's some decent pullbacks in this move. We got some Elliott wave crap going on. Finally gets up here. That's 3. And 4, I'll draw this one in yellow just because I don't want to overlap these other lines. What if it comes up here and then decides to come down, and instead of bouncing there, which would still make it a 80% odds of getting up, it exits out on you. These, what we call T4s, where, it's the 4th kind of thing that can happen to us in a trade, where no sooner we enter, it turns around and goes against us. That happens very rarely. It does happen in a D that's not qualified. It does happen in a D when we're trying to take a trade inside a PRZ instead of waiting for the D to get to the second line. But if we have it quick fire qualified, our 80% is going to hold true. So here's 2 trades, or here's 4 trades, and I drew 2 of them, A and B, as failing and qualifying for that 20% where the pitchfork fails. But what I want you to notice where the lie came in is I always call them 10 pip losses. When I enter the trade here and I exit the trade here, you will note I made pips when the pitchfork failed. Let me say that again. Some of the time, when the pitchfork hits its 20% failure rate, we still win in the trade. Ooh, ah. So yes, statistically, the pitchfork will win 80 and lose 20 in terms of success being defined by getting to the median. But the pitchfork can fail because it never got to the median, and I still make plenty of good pips. So what does that mean about the 80%? Technically, it's even higher. I might have 2 ventures that go up. I'll draw this one in red. So I leave the swing low, and better make that a pencil. I leave the swing low, and price goes up. It gets up here, it comes down, gets real close, doesn't hit. Maybe it does hit, goes on up. Can't quite get to the median, comes down and goes out. Well, again, I'm going out up here. I got in down here. Boom. So I very well may have 2 pitchfork fails, but I win 10 out of 10 trades. Well, in terms of Charlie Delta, we don't use an MSL. We just throw a 10 pip stop loss on it. So it's even sweeter than I told you. All right, so now you understand that. Let's go back and make this same talk we had about the 15% line at 89.33% of the time in Charlie Delta. If we have a traditional fork and we're talking the first bounce from the swing low, we're not talking about consecutive bounces. We're talking about the first bounce from the swing low. 80% chance of getting to the median. So, run the numbers. Qualified quickfire D. Price starts moving up. I draw my Charlie Delta fork. We just got the 15% line. Price keeps moving up. Should I lock in? Now remember, this is Charlie Delta, not quickfire. We got to our 15% line. Should I lock in my profit at that point? Newer traders do much better with this than older traders. Yeah, I used to do a lot of competitive tennis, and I think I've said this many times to various groups. I hated playing new tennis players. Just hate it. It makes your game much different. New traders will do better than this than older traders. Why? Because older traders have pounded and programmed their subconscious. And when they do, and they try and go against that, their ego and emotion is going to kick in. So if you're trading Charlie Delta, and we're going to say 80% chance of winning, we know that's a low number. Now you can adjust this a little in your head. The steeper this pitchfork, the higher our percentage above 80. The flatter the pitchfork, the closer we're going to be to 80. Does that make sense? Because in a flat pitchfork, as it moves eastbound, it's not rising very much. But the steeper this is, as it moves eastbound, this red line gets steeper. If I get stopped out way downstream, I'm making more pips. Well, it is a good thing it is a good thing in a random market where you don't know what's going on. It is a good thing to lock in profit periodically. Because if you don't know where it's going, it's gambling if you don't lock in profit. So we're in our trade. It moves 15, it got, it gives us the Charlie Delta, it gives the quick fire 15%, 89.33% of the time. We know where that 15% line is, and we have our stop loss for this trade. And again, as you get skilled, you'll understand, especially on 15-minute charts, it makes no sense to have a 10 pip stop loss. 5 is all you need, because a breach is a breach and it invalidates the fork, especially on this start. Farther downstream on bigger time frames, yeah, but as you start a 15-minute trade, we really don't need 10 pips. But let's start there. Creep, crawl, walk, run. 10 pip stop loss, 10 pip target. So we get to this 15% line. We never want to lock in anything. What's locked in is the fact that it's the visualization here that's confusing you. If this is, let's say as an advanced trader, if this is a 5 pip line outside my pitchfork, we are locking in profit. It's just you don't see it because you're visualizing this as the stop, because that's how I've drawn it. But that's incorrect, because the stop, depending on where price is vertically below that and then horizontally across. Here's what I mean. If price gets up here, we say, well, we're not going to get stopped out till down here, and you feel like you're exposed from here because you never moved your stop loss. But you have. It slid up on this line. Because when you get here, I can draw a vertical line because price can't move backwards. The worst it can do is drop straight down. So when price gets here, I have moved my stop loss. It's over here. It's not here where it was when I started. So this is sliding your stop loss up. What you don't want to do is draw a horizontal stop loss inside the fork, short of this vertical candle or a vertical line coming all the way down outside. In other words, I don't want to draw, when I'm here with price, I don't want to draw a stop loss and enter a stop loss in my trading station that looks like that. Why? Because this may come all the way down and even tag this line, as long as it doesn't breach it, and go on up and hit the median. So if you're advancing your stop inside the fork horizontally, you're doing the wrong thing. Enter down here, your stop loss is here. As price moves up, the stop loss essentially is automatically being moved in your favor. So it's not, I'm running blind. And when you have what? The steeper the fork, and the farther it goes east, you don't care whether the pitchfork hits its 80% or 20%. Because the farther east it goes in that steeper fork, the more profit I'm going to make when I get not stopped out, but what? Profited out. Comes up here, doesn't make a challenge, finally gets up here, it gives up the ship and comes out. Well, nice. The pitchfork failed. It never got to the median. But I entered down here and I got stopped out here. I made that much profit in the trade. So who cares that it failed? So you don't want to lock in anything in your head. Oh, I got 15, better lock in 10. Oh, I'm up at 30 pips. I should lock in at least 10, so if this fails, I'll get 10 pips. It's automatically being locked in at the correct rate and speed as price moves up based on the angle of the fork. It's done for you automatically. Just realize that. Newer most traders are so used to seeing this. Price moves up, here's my stop loss. Price moves up to a certain point, advance my stop loss. They're looking at this whole thing in a linear upward, right where they are move. Price gets up here. Well, time to advance my stop loss up some more. Let's keep locking in profit. This is doing the same thing for you automatically. It's just doing it based on the numbers. You don't want to do it in your head. You don't want to do something random, because you will end up doing something like this, where you put the stop loss inside the fork before it should be. Let the fork do the work for you. You may lose 2 out of 10. You may lose 1 out of 10. You may lose none out of 10, because it advanced far enough along before it failed to hit. Yeah, fork it out. So it's pretty cool. And so when you marry these two things, as you get going, don't do this from the start. As you marry these two things, and why do you want to marry? I had somebody the other day. Oh, I don't want to learn all this pitchfork stuff. I just want to trade quickfire. And I'm like, okay. I mean, that is your choice. But understand something. The only thing you get with quickfire is this 15%. You know that's a great number, and it's a good pips. It's good pips. But that's all you'll ever get off quickfire. Why not take a quickfire trade where you qualify this point, and then you have no target other than the median because you drew a Charlie Delta, for which you're going to win over 80% of the time. Forget 10 pips. Forget 15%. The few times it's going to come back on you, and you're not going to get much advantage out of the elevated stop loss because it was fairly flat, or it just didn't move that far eastbound and it turned around on you. Big deal. What's that going to happen? In terms of the fork, Andrew says 20% of the time, but you got a qualified Charlie Delta that's saying 9 out of 10 times you're going to win. So one of them's right, one of them's going to be confused, but you've married the two. So if the quick fire trade, I'm going to lose 11% of the time on that quick turnaround, where it never gets to 15%. If you're looking at it purely from the pitchfork perspective, well, you're going to lose 20% of the time. The difference between these two is the 11%, while it's a fewer time you're lost, it's a higher percentage you're going to win, it's fewer pips. It's 15% of whatever the entire deal is. This is 50% or more of the pips. So you have a slightly higher failure rate if you look at the fork, 20% compared to 11, but the 80% that you win is on, 3 and 4 times the pips that you get in the 15%. The odds are so high in your favor that when you do lose, there's no emotion to it. It doesn't bother you. You go all the way back in baseball. I don't think I've done much baseball stuff in here. I do in my other groups. I'm not a huge baseball fan, but, there's certain things there that are pretty interesting. Babe Ruth, everybody knows Babe Ruth for, way back when, and for many years, decades, led the league, National Baseball League, Major League Baseball. He led the league in home runs. Not a lot of people know he led the league in strikeouts during that time frame. And there were they were baseball players who didn't want the stigma of having high strikeouts. So they swung level instead of swinging up. Instead of crossing the plane, which is very hard to do to hit a deep drive ball, They were swinging more level, striking out less than Babe Ruth. But here's the thing. Who scored more runs? Who drove more runs in? See, you get to first base. I don't know the statistics. I'm not a baseball fan. Some of you might be a baseball fanatic and be able to tell me. What's the percentage of time somebody gets on first base that they actually score? So, I don't know the name. I'll just say it as I see it. Bvelez, Bevelez. Do you have the harmonic scan alerts via Telegram? Okay, well then you already have the answer. So Babe Ruth was like, hey, okay, you strike out 1/3 less, but I score 6 times more. Which is more important? That guy can get a base hit every game, and it doesn't mean anything if he doesn't get around the bases, or if nobody else is on where they can score, right? So this is why doing the math, knowing the math is always important. So it's a very special situation. Harmonic scan married to a Charlie Delta. I've been trading a long time, guys. I don't see, first of all, these are two independent special things, and then you're marrying them to a very unique time. And there's a certain amount of percentages that we can assign here, and one bleeds into the other. There's no other time you could do this with this level of feel. Can I draw a traditional pitchfork elsewhere on the chart and still have the 80%? Absolutely. The difference is in that swing low, as I've drawn it here. Here you can qualify the swing low is not going to move on you. Because when I put a quick fire move on it, and I isolate the D at the time it hits the green line, I'm going to win that 90% of the time. Some of you don't think so, but that's because you're doing silly things on the charts, which is why as we start to see more and more quick fire posts, we'll see those silly things and we'll correct them. I just said quick fire qualify it. The other way you already have access to. Others don't, but you do. And as Tim just said, if you're not in the trade from the swing low, you can wait for 15%. So you're getting in the trade late, but the numbers work still very much in your favor. What's 15? We said 60 pip channel. What's 15%? We said 7.5 pips. So it gets the 7.5 pips. We've had a successful scan. It doesn't mean it can't turn around, but somewhere as we get close to that 7.5 pips, this scan is as good as it's going to get. And we're probably, if this was quickfire qualified and it hit the line, we're not talking about 3 pips short, 3 pips, it hit the line and it was qualified. And then it moves out 15%. We can wait for it to get to the 15%. With the 30 pip target, we still have 22.5 pips to make, for which we will get what? 80% of the time. Let's call it 22. 166 pips. If we lose twice from there, we're 7.5 pips into the trade, plus your 5 or 10 pip stop loss. 17.5 times 2, 35 pips. Sorry about that, 3. 131, 26%. So we can wait. We don't have to enter here. We can see if the quickfire trade moves far enough that the D isn't going to shift. It's successful. Enter the trade then. You still have an 80%. Doesn't matter what happens in here. You still have 80% chance all the way up to get there. So I get 7. What did I say? 22.5 instead of, or 7.5 from 30. Yeah, I get 22.5 instead of 30, but I get it 8 times. The 2 times it doesn't work, I have a bigger stop loss. I have a bigger stop to eat, but the numbers still speak for themselves. Again, a little hard to adjust to, especially my group. We're so used to getting in right away. To wait 7.5 pips on a 60 pip trade, on a 60 pip thing. That's what I've said 1,000 times, but here's the deal. New traders have the IML scanner in their hands, and as soon as they could learn, they don't have to understand MACD, they don't have to understand RSI, just have to know how to use it. Is it above this level? Is it below it? Can you draw a straight line on humps, bottom, top side, and do divergence? So they could be trading quickfire while they're learning pitchforks. Once you know both pitchforks and quickfire, as Tim said, that's what I was doing all along, was waiting for the scan. I used to say the scan is a pitchfork alert. 30, he means 50. I don't know what you're talking about. So, to play the numbers. Play the numbers. All right, so I want to start seeing quickfire, and I want to start seeing Charlie Delta and forks, and it's time to turn it loose. You guys have been with me from the beginning. It's time to turn it loose. There's no holding back at this point. The only thing that's holding you back is you. You've got a trading guideline now. Trade the hell out of this. Let's get scans. Let's get pitchforks. Let's make pips. All right, David, it's called Fibonacci, and the Fibonacci tool. If you go to the pin post for our group, it's in there. It'll say Telegram alerts. It's like this halfway through the pin post. I'm redoing the pin post. It's going to be a document instead of a file. So you'll be able to download everything that's in there. So good. We covered a lot tonight. So we have a live group. And so for you brand new traders, let me tell you why we're different. Okay, for the brand new traders that have hung around all this time. Some of you probably haven't, but it's okay. The ones with persistence will win out. Yeah, paid subscription, $2.99 a month, 10 days free. Our process is different. So I teach at IML Live which you guys are at. From here, for support and additional training, we use the iMarkets Live Scans, Forks, and Fibos group, where instead of just throwing something to you, you get a chance to throw it back and show what you understood. And we have admin coaches in there that will help you as you post trades to help you learn what not to do. Don't put the mental pressure on trying to get it right. That's how the old paradigm works. That's why the old paradigm fails. We want to put pressure on doing it, treating your demo trading account and treating this group as your experimental lab. See what's going to work in my laboratory. So you trade, we say don't do this instead, don't do that, do this instead. And over time you learn what not to do. That's how you achieve success in trading. You don't learn what to do from the start. That's called guessing, and if you succeed out of the gates, it's the worst thing that can happen to you, because you won't be able to duplicate that luck in the future, and now you're going to think, well crap, I was a good trader last month and this month I'm not. You want to learn by learning what not to do. So we use interactive coaching, where not only do you hear from us, we get to see what you do, and then we complement that. So at the level we do it, I think we're the only one that does it at this depth of a level. And then additionally, in that Facebook group, there are from time to time snippet videos. Sometimes they're 15 minutes, sometimes they're 2 hours. So it's additional training outside IMLTV. So it's a real strong synergy working between IML and this Facebook group, and they kind of loop together and make you stronger and stronger. So Tim just put up the link for the Facebook group. For brand new traders, when you go to that Facebook group, you're going to see something in there referencing a free pitchfork course. So I'm going to put that slide up, and then we're going to call it a night. I have to make one correction here. I haven't made it to the slide yet, though. We did change the password, and the password has been changed in such a way that instead of the 17 for the year at the end, it is 2017. I just did a security kind of change the password deal. So I need to update this slide. So new traders, take a screenshot of this slide. It gives you the group. There's a Telegram group, which I haven't used much yet, hardly at all. Here's your free pitchfork course. Do not give that link to anybody else. It's only for IML traders. It's a pitchfork mastery course that I have that I'm giving to IML traders. That's where you can find it. And when you go through the registration process, here's what you need to be able to log into that course. Also give away a really nice position sizing Forex Traders Calculator, and you can get that at fxtraderscalculator.com. I'll erase all this except here. So take a screenshot now of that. Once you see that check mark outside the green box, and you'll be good to go. Yeah, I spend most of my time on the head game. I do a couple of things. I try and show you the math where there is math, because math and logic will eliminate emotion. When you use math and logic, you are uninviting ego to participate in your trading. You are uninviting emotion to be part of your trading. That's when you enjoy it. That's when you'll have the highest success rates. That's when you go to bed at night early because you're anxious to get up the next morning and start trading again. And that's when you achieve consistency. The longer you allow emotion to linger, the stronger it gets. It's that dog pooping in the corner. The longer you allow him to do it, the harder it is going to be to train him not to do it. So we're almost there. I mean, I'm wrapping a bunch of stuff up, and we got the holidays, so it's going to slow down a little overall. I have a little bit of non-teaching time in there, and that's good because I'm using it administratively. I'm making everything good. We're gonna have it's a one-stop shop. You're going to come here. We're going to give you the link to our group site, and everything you need is going to be there in the Files tab. If you're brand new, this is what you need to do. Instead of us repeating it in here over and over again, we'll just tell you to go there to get it. Right now you have to ask. Right now we're still kind of structuring it to work the way it needs to work. So we're a little different than some of the other groups, channels. I understand that, in that we have. But look, I'm interested in success for you. And it's not going to be an overnight thing. Doesn't have to take 2 or 3 years, but it's not going to be overnight. There's going to be several months. And the fastest way to get there is just listen and do as we ask. Because you got to remember, I'll say this one last time, we're not compensated to help you. I'm not even compensated to be here as an IML educator. And so if I can get you to success faster, that's what I want to do. And so I use my 14 years of coaching experience to do that. And what works better, I will shift in a heartbeat. I'm not emotionally attached. I don't have ego to what I do. If I can find a better way to do it, and that's results driven. And there's plenty of times guys closer to me, Tim and Theo and Zoe, and y'all know, I will bleed my heart out to try and help you. And so if I could do that with less effort, trust me, I want to do that. So if I can find ways to make things more efficient, if I can find ways to get you to success faster, my God, I can finally get rid of you. Be done with you. I don't want to linger on. No. Make sure you keep it case sensitive. Because it's only worked for about 887 other people. No, see, your IML is lowercase. It has to be uppercase. If it was lowercase, I would have made it lowercase in the picture that you're looking at on your monitor. It's not how it showed on the screen. Oh, there you go. I understand. Yes, there you go. Mm-hmm. All right, well, we've gone way over again. I apologize. Remember, next week I will teach Monday night, and you guys should understand that's special because everything else I do, my PIP club, my family, my family of traders, I'm not dealing with next week. I'm taking the whole week off, but I'm coming back just to be here for you guys on Monday night, but I will be off Wednesday next week. So last weekend before the USA Thanksgiving, and so this is the last live session of the week for this group. So as always, I will say life can be short. So for those people you think and that you care and love, please let them know that you care and love them. I don't deal well. I'm sorry, I didn't see it, Felicia. I don't know how long ago you asked it. It's impossible in this chat box to really find stuff. Go ahead and type it in real quick, and I'll try and answer it. I'm sorry, I didn't see it as it came up because I do this thing called teaching, and so the more there's gossip inside the chat box, the more scrolling takes place, and I don't see some questions because I'm too busy on my other monitors teaching. But type it in there real quick. I'll try and answer it. Thank you guys for hanging around long again. One thing I'll say, nobody that stays with me is going to get their $145 worth from IML. Which video did Steve go over how to set up MT4 scan alerts are not working well? Okay, so I'm struggling a little with the English there. I don't tell you how to set up MT4 scanner alerts because I don't use MT4. So I would say go to IML Train, and if not IML Train, I would ask the person who sponsored you into IML. And if they can't answer it, then say, I need to speak to your upline until find me somebody that can do it. But I don't use MT4, so I couldn't tell you how to set them up. Our alerts that we have in the Telegram group use MT4 alerts. We just have them, Adam has them converted to Telegram, so it's on your phone and you can keep it separate from regular alerts and regular email. That's what I like about Telegram. The MT4 version has had some issues lately too, Tim. I've seen that posted several places. So it's not just the web scanner that's having some issues. Some of the MT4 is struggling too. So they're doing some work. I don't know when it's supposed to be over. But I saw a couple days back everybody was complaining about their MT4 scans and MT4 alerts. But most people in here, not all, but most are working off the web scanner and moving towards TradingView versus staying at MT4. I understand people on some of the trading products want to be on MT4, so I get that. When you go to the scans, they are already old. I don't know. You mean MT4 scans? So you have alerts set up and you're not getting notified soon enough? Is that what it sounds like? Okay. Yeah, I think it is too. It's either an IML Train or it's inside IML Academy. So I would look there. With all this stuff, I mean, I would really recommend to Jason and IML that they get like at least 2 times a week, maybe 3 times a week, MT4 session to just be anybody that has MT4 questions, go there. All right, I'm going to cut out of here. You guys can continue to chat. I will see you next Monday. Have a great week.